Good afternoon, ladies and gentlemen, and welcome to the Argo Blockchain PLC post-AGM investor Q&A. Throughout this recorded question and answer session, investors online will be in listen-only mode. Questions are, of course, encouraged and can be submitted at any time via the Q&A tab, just situated on the right-hand corner of your screen. So please just simply type in your question at any time and press send. The company may not be in a position to answer every question received during the meeting itself, given the attendance on today's call. However, the company will review all questions submitted today and publish responses where it's appropriate to do so. As usual, we'd like to submit the following poll, and I'm sure the company would be most grateful for your participation. I'd now like to hand over to Peter Wall, CEO. Good afternoon, sir.
Thank you, Mark. Welcome, everyone. Before I give a few opening remarks, I just want to welcome as well on the call with me, we have Alex Appleton, our CFO, who's in London. We've got Tom Devine, who's our VP of Investor Relations, and Tom is in Houston. So I think, as everyone knows, we held our AGM this morning, and that was held at an office in London. We had about 100 virtual attendees as well. The result of the AGM was that all of the resolutions that were put forth by the company have passed. So we're pleased about that. Thank you for those of you that got out and voted. We really appreciate the support. And then, as we've done in the past, we hold this Q&A for shareholders post-AGM. We have it at 11 a.m. Eastern, 4 p.m. UK time, 8 a.m. Pacific, so that our shareholders in both the UK and the US and Canada are able to join. We've had a number of questions that have been pre-submitted through the Investor Meet platform. Tom has been gathering those. We're going to start with answering those. And then you can also submit questions through the chat function in the Investor Meet platform on your browser. One thing to note is that our interim results are going to come out in the next couple of months. We'll have detailed numbers so far about the first half of the year at that point, and obviously a more fulsome update on all the company's activities. So we did receive some specific questions having to do with the financials for the first half of the year. Some of those we can answer if we've disclosed them in any of our operational updates or in our Q1 earnings update, which was not that long ago. We did that in May. And some of those are going to have to wait until we have the interims that come out in a couple months. All right, so that's the intro from me. Again, thanks for joining. I'm going to hand it over to Tom, and Tom's going to walk us through some of the questions that have come in.
Yeah, thanks, Peter. So we got several pre-submitted questions over the past couple of days, and understandably, a lot of them have had to do with the price of Bitcoin and the general market environment. Some examples of those questions include, what does the recent drop in Bitcoin price mean for Argo's ongoing viability? How low can Bitcoin prices go and Argo remain profitable? And what happens if Bitcoin prices drop to 10,000 to 12,000 per Bitcoin? So Peter, can you give us your thoughts on the current market environment and what it means for Argo?
Sure. Thanks, Tom. So obviously some good questions, some very relevant questions. And, to start with, obviously we always want to see Bitcoin as high as possible. That being said, as one of the longer tenured, mining companies, we've been through this before. We've been through bear markets before. I've been using the term muscle memory a lot, which we have from those experiences. Myself and Sebastian and Perry call on that muscle memory back from 2018, 2019, certainly the first half of 2020. And this feels similar in many ways, but this also feels different, this particular bear market that we're in, because I think at this particular moment in the history of crypto and the history of Bitcoin, there's a lot more going on. There's a lot more institutional support. There's institutional investors. There's a large retail investor following that has a long-term belief in this space. There's investment banks. There's lending institutions. All of these types of support and members of the ecosystem really didn't exist before. They didn't exist in the last bear market. And so my feeling, and I think the company's feeling, is that all of that kind of support really feels like it means that this sector of the economy, of the future, financial system is not going to go away anytime soon. And that is different than 2019, 2020, when 2018, when, Bitcoin spiked and then came down. And there was a feeling like, is Bitcoin ever going to recover? And this doesn't feel like that. This feels like, those of us that are in this space have an extreme amount of confidence that in the long term, this asset class, in particular Bitcoin, is going to continue to appreciate. So we're long-term bullish, and the short term, there's going to be some volatility, and we're in that right now, and it never feels good. But we know, or we believe that in the long term, things are going to work out, in the right direction for this particular industry. And certainly that's been true when you zoom out and look at the last 10 years, last 12 years in the history of Bitcoin. In terms of the particular macro environment situation, obviously that's also different this time around. In 2018, 2019, 2020, the macro environment was pretty good. Now we've got a risk-off environment. Bitcoin is acting more like a tech stock. In fact, is down less than a lot of other tech stocks. So it shouldn't be that surprising that, in a risk-off environment, a newer asset class that is seen as a higher risk asset class like Bitcoin or like crypto or like, miners are going to, have some volatility. In terms of how all of this affects us, similar to 2018, 2019, when we went through this before, we focused on execution. So right now we're focusing on executing at Helios. We are very fortunate that we got that facility, funded and started when we did. I think the timing was really good for us. And so we're now in a place where, we've paid for the vast majority of the Bitmain machines, which are coming in and being installed on a weekly basis, on a monthly basis. And we'll have an update next week as part of our operational update about where we're at with the installation of those machines and where our hash rate's at and how much we've mined for this month. And the good news is that we've paid for over 90% of those machines, of those 20,000 machines that we ordered from Bitmain that are being installed. The other good news is that, 95% of the facility is paid for that first 200 megawatts of phase one. All of which means that, the 3.6 exahash from those 20K machines is on track and is paid for. So that's a good thing for us. And our focus really, as I said, is on executing to make sure that, we meet our monthly targets for getting our hash rate up, which ultimately will allow us to mine more Bitcoin. We can't control the price of Bitcoin, but what we can control is how many machines we install and how, much we're able to keep our hash rate online. In terms of other pieces, people ask about, as Tom said, what happens if Bitcoin goes to 10,000 to 12,000? Alex is going to go a little bit more into a bit more detail on this in a minute. Our direct cost of producing a Bitcoin has been around $10,000 so far this year in 2022. In that scenario, if Bitcoin was to drop to that price, it would be close to our marginal cost of production. But the thing to remember is that the network is dynamic and to a certain extent self-regulating. And we saw this during the 2020, halving, where the price of Bitcoin, was pretty low in the halving environment. Quite a bit of hash rate came offline, so margins were compressed and then recovered, to a decent effect fairly quickly afterwards, because miners that are less efficient than us came offline because people's cost of production was more than their revenue they were getting from Bitcoin. And so, at the level of Bitcoin, if Bitcoin goes to 10,000, we would expect to see a significant reduction in the network hash rate as miners unplug those machines, which are essentially no longer economic. On top of that, on top of a kind of a low cost of production, our balance sheet is also strong enough to be able to withstand lower prices and then potentially take advantage of any increased market share that would come with that, and then any potential downturn in the price of machines. So we feel like we're in a really good place. As a miner, we feel like we're really well positioned, and that's a testament to the work that we did in 2021 and to really kind of over delivering and under promising, which has kind of been the theme for us for the first half of this year so far. So I'm going to hand it over to Alex, who's going to go into a little bit more detail on the numbers.
Hi all, good to speak to you all. So obviously, as Peter said, it's not great that BTC prices have come down so much. However, our mining margin, certainly what we've presented in previous investor presentations, remains very competitive and indeed market leading. We always talk about being in the top tier A of miners, and those are the miners who are going to really thrive in the long run. So, as Peter said, our average direct cost per Bitcoin mined is somewhere around $10,000 over the last few months. But that's not our break-even point because of the nature of the algorithm, and Peter touched upon this. As other miners switch off their machines, our percentage of the network increases. So even though the price is coming down, potentially we're mining more Bitcoin. And that is how the algorithm self-regulates. We've seen this before, as Peter said, during the halving. We saw this last year when we saw a decrease around the Chinese mining ban. We saw a decrease in the price of Bitcoin, but we also saw a decrease in the network hash rate as those Chinese miners turned their machines off. So actually, if you look at our revenue over the past year, and you can see it from our operational updates, our revenue and our mining margin stayed relatively consistent even through that period where we saw, hash rate changing quite considerably and also the Bitcoin price changing. So our strong focus on efficiency and we're really building out this focus on efficiency. We're in the final stages of becoming a vertically integrated miner, where we're moving to the owned and operated model. We own our own infrastructure. We are close to our machines. And this gives us more control in a bear market. We've talked about the runway before, and Peter's talked about the runway that we have in Texas. We have the ability to control, what we own and how we manage it. So we're in a really good place from that point of view. We're also developing proprietary immersion technology and designing custom rigs to use the Intel chips. And we are still, very profitable in terms of mining. We're in that tier A. And that's how you should think about this. That's how we think about it, maintaining that economic advantage over our peers and the mining margins that you see that we can achieve using our own equipment and from our own facility. So we are well placed. Thank you.
Thanks, Alex. Our next topic that we've gotten a few questions on has to do with our outstanding debt and specifically the BitcoinBacked loan that we have with Galaxy. Could you go into a little bit more detail about that and how what our strategy is around that loan?
Okay, so as Peter said earlier on in the call, in terms of actual specifics around some of the numbers, we'll be looking to discuss them and disclose them as we bring out our interims. So I won't go into actual specifics, but I think the question really comes from what we've seen from some of our peers and what our attitude to risk is and our hedging strategy. So the first thing to say is, a hedging strategy is not new to us. We've been having a hedging strategy, be it around, when we were selling Bitcoin and how we sold Bitcoin. We had what was then called the relative exposure strategy. So we sold Bitcoin in a controlled fashion, forecasting what our cash flow and fiat requirement was, and then slowly selling off Bitcoin to meet those particular peaks in demand, be that at the end of the month when the power bills were due, etc. And what that enabled us to do was manage either accelerating if we saw a spike in Bitcoin price, the sale of Bitcoin, or pulling back if we saw a slump. The last thing you want to be is in a position where you have to sell Bitcoin today to meet a cost from tomorrow. So we've always had strategies around, hedging and exposure, etc. And when we first took on board the BitcoinBacked loans, about this time last year, a little bit earlier than that last year, we developed our strategy, and we've been refining that strategy certainly over the past sort of 12 months or so. We've had, increase in knowledge in terms of people coming into the business, for example, Saif, the new COO, has brought his knowledge and experience to bear on that. And actually, yesterday, as recently as yesterday, we hired a new derivatives trader who is going to really supercharge that strategy and really refine it. So in terms of where we are, I'm comfortable with our strategy. I think it's a good one. It's working, and we are making plans just to improve it and to keep on improving it.
I might just add one thing, Alex, which is I was at a conference recently, and there was lots of talk about hedging, which miners had not necessarily been talking about previously. And so, the hedging production, hedging in general is something that is in the ether in 2022, and certainly wasn't in 2021. But as Alex said, we've been going back to 2019, 2020, we've been talking about hedging. We've done various hedges, and have continued, with where the market is this year, done some hedging. So we're, as Alex said, we're really pleased with where we're at in terms of the Bitcoin-backed loan hedging in particular, and we'll put more details out about that with the interims.
Thanks, Peter and Alex. Alex, kind of continuing on talking about the bonds, or I'm sorry, the other outstanding debt. We've gotten the question. Can you just kind of recap the other outstanding debt that we have outside of the Bitcoin-backed loan?
Okay, so there's four real streams. So there's the baby bonds, which we raised on the NASDAQ last November, $40 million worth. I think the interest rate was 8.75%. Earlier this year, we took on the NASDAQ infrastructure financing, so that was $27 million worth. And then we also have the NASDAQ machine financing. Now that is really a facility of 71 million, which we're drawing down as we're receiving machines that is collateralized against. There is also some small mortgages on the Canadian properties. So I think those are the four streams of debt that we have on top of the Bitcoin-backed loan.
Great, thanks, Alex. Peter, the next question, we've got a couple questions to give an update on both Argo Labs and Pluto, and maybe you can also just real quickly kind of talk about the differences between Argo Labs and Pluto.
Sure. Let me start with Argo Labs. So Argo Labs is our in-house innovation arm that is essentially a non-mining division. They are currently managing approximately 10% of our HODL and using it to participate in various projects within the broader blockchain ecosystem with a specific focus on Web3 projects. In terms of details on our Q1 earnings call, I dug into a little bit of some of the projects that Argo Labs is working on, including a bunch of different token projects, some GameFi, some NFTs, and then on the participatory side, running nodes, staking, providing some liquidity on various DeFi protocols. I also updated about our exposure to the Terra situation, and essentially, updated the market or updated shareholders that it wasn't an issue for us, and we really didn't have any exposure there. And then just in general, we're happy with the work that Argo Labs is doing. It's a long-term play on the ecosystem, and we've got a team of about 5 or 6 there, and they continue to perform well, and we are staying the course on Argo Labs. In terms of the difference between Argo Labs and Pluto is an outside investment into a privately held company. Argo Labs is an internal division. There's some overlap in that they are both involved in NFTs and GameFi and Web3 projects. But ultimately, they're very different teams doing different things, looking at different projects. In terms of our position on where Pluto's at right now, or an update in terms of the overall performance of the team at Pluto. We're an active shareholder of Pluto. We're in regular contact with them, and we're confident in the management team there. and that, in the long term, our investment will be fruitful. So yeah, that's the update for Pluto and Argo Labs.
Great. Our next question, Peter, comes from Shigar S. If you don't raise equity or debt or sell Bitcoin, is your only income stream coming from DeFi? Maybe you can talk about what our financing options are.
Sure. Hi, Shigar. I think you dropped that question in the Q&A. So we have three levers, and I've talked about this a lot. Some of you are probably tired of hearing about the three levers. I know Alex is. So one is selling Bitcoin, one is raising debt, and one is raising equity. We've done all three of those at different times in the company's history. 2021, it was really the year of raising equity with a little bit of debt. 2022, so far, the first half of this year has been raising debt, and we've sold some Bitcoin. And we've said for the second half of this year, we're going to continue with the same strategy at about a 2-to-1 ratio in terms of debt to Bitcoin. Obviously, that depends on where the debt markets are at, whether we like the deals that are out there. As I said earlier, we don't have a ton of huge costs coming up because the vast majority of our Bitmain machines and our infrastructure are paid for. It's really just the Intel machines that we have some costs coming up on, and there's some flexibility there for us to lean in or lean out depending on market conditions and the like. So in terms of income from DeFi, it's not material for us. It's really those other three levers. Yeah, that's kind of how we view, being able to pay for both operational expenses and for any CapEx that we have. Alex, do you want to add anything to that?
No, I think you pretty much covered it, Peter. I think the at the moment it is that debt and selling Bitcoin, and that's the strategy that we're pursuing at the moment.
Great, thanks, Peter. The next question comes from Jason B, and it has to do with the resolutions that were passed this morning. Why do you believe resolutions 2 and 9 had 25 to 28% votes against, and how are you proposing to address those reasons?
Sure, thank you, Jason. Yeah, we're very pleased with the outcome of the AGM this morning, as I said, and the various resolutions. Resolution 9 is a super important one for us. It's our incentive plan to make sure that we can keep our team members, now and into the future engaged and make sure that they have an option for equity, or essentially options as the company grows. And that's really important, obviously, for a young company like us to have staff that can grow and be incentivized alongside shareholders. So thank you. Shareholders have voted in favor of that. In terms of why we didn't get as much of a majority on those than on the other resolutions, one of the proxy advisors recommended against them. There's three main proxy advisors out in the world: Glass Lewis, Egan Jones, and ISS. Glass Lewis and Egan Jones voted in or recommended voting in favor of all the resolutions. The ISS didn't. There was some kind of technicalities in the incentive plan that they thought that we needed to address. It's not unusual for the ISS to recommend voting against various resolutions. Some institutions follow them to the letter, some don't. It really depends on the particular resolution. So we're going to continue to engage with our shareholders to discuss their concerns. We're going to continue to engage with proxy advisors. I think as a company, we're still in the early years. We're still every year improving and improving our ability to engage with folks like proxy advisors. And so I feel like this was a really good outcome for us, and it'll, I think, continue to go well in the future for us if we take the same tack that we took this time.
Great. Our next question comes from Dave in the UK. What percentage of Argo is using green energy, and what are the long-term aims of Argo regarding green energy?
Sure. Thank you, Dave, in the UK. So all of our operations, Dave, in Quebec get their power from Hydro-Quebec, which is 99% renewable. It's hydropower. In Texas, we're plugged into the grid, an interconnection with ERCOT. and we're located in an area that has 85% wind power. So any power that we are getting that is not from renewables, we're offsetting with renewable energy credits and verified energy reductions. Last year, we put out our full climate strategy. This year, we're going to put one out again. It's coming out soon, so keep an eye out for it. And you'll see kind of the 2021 numbers, kind of where we're at, how we get to carbon neutrality. In fact, we go beyond carbon neutrality. We're climate positive or carbon negative. So we feel good about our approach to sustainability. It's a key part of who we are. It's a key differentiator from other companies. It's a key part of our values and has been since we started mining in Quebec using hydropower. We're going to continue to lean into it.
Great. Thanks, Peter. Our next question comes from Stephen G. Can you comment on whether you are going to convert Canadian shares into NASDAQ shares, and if and when that's scheduled to happen?
Sure. Thank you, Stephen. So we're not listed in Canada, Stephen. We're primary shares are listed on the LSE, and then we have ADRs listed on the NASDAQ. No plans to convert any Canadian shares because we don't have any.
Thanks, Peter. Another question from Shigar S. Do you see any distressed assets for sale in the market?
So I can't comment on any specifics, but what I can say is generally, I don't think it's a secret that there are miners that have, overcommitted to orders and have put down deposits on orders and either don't have a place for those machines or don't have the capital to pay for those machines. So in general, in the sector, there's lots of talk about, machines that are becoming available that are less expensive than they were, a few months ago, and certainly significantly less expensive than last year. So if that's what you mean, Shigar, by distressed assets, I think there are some. I don't think it's a massive amount. But there's definitely some opportunities out there for lower cost assets than there was, 3 months, 6 months, certainly 12 months ago.
Thanks, Peter. We have another question coming in from Gil R. What is your advantage compared to other Bitcoin mining companies?
So I think it's a good question. I think we have a couple advantages. I touched on our ESG efforts. I think that's a big part of who we are and is a key differentiator. As Alex mentioned, we are in the upper tier of efficiency for miners in terms of our cost of production. And that's because of our low cost of power in Quebec and our low cost of power in Texas. I would also add that, our experience in mining is at this point a differentiator. We've been mining for 4.5 years at scale. Our team is very granular in their ability to control miners, in our ability to, have a really good uptime. So I would say that that's a key differentiator for us. And then lastly, I think we're an innovative company. So, we're one of only 4 companies working with Intel and we'll be producing machines with a chip coming from Intel in a custom designed rig that we are co-designing with Epic Blockchain, who's a Canadian manufacturing company. I think that is, no one else is doing that, and that's going to be a key differentiator for us. And I would include within the innovation, kind of side of things, Argo Labs as well, which is we are, looking forward into the future at Web3 projects, which we think are going to be profitable and engaging and important and disruptive. And we're learning about them, leaning into them, and ultimately deploying resources into them. So I think those are some of the kind of key differentiators for us. I like the position we're in right now. I think we played it smart in 2021. We didn't overcommit. We're also the captain of our own ship at Helios. We can expand that facility another 600 megawatts at our own discretion, at our own pace. In a bear market, that's important that you're not overly committed or undercommitted, that you can turn on development relatively quickly. And we have that kind of optionality both with Helios and with the Intel rigs that we're producing.
Thanks, Peter. We're coming up on the half of the hour, so this will be our last question. And really, it's kind of an amalgamation of more operational questions that we've gotten. We've gotten some questions asking for updates on TerraPool, downtime at Helios, immersion, updates on how much Bitcoin we're holding. Maybe you can kind of wrap up with an answer about those.
Sure. So TerraPool, as we mentioned in a recent operational update, we're evaluating, how much hash rate we want to put into TerraPool in the future. We had a rough month in May. Haven't given any updates to shareholders or the market since then, other than it's something that we were involved with at an inception and are continuing to evaluate how much we're gonna again how much hash rate we're gonna put into it. Downtime at Helios, I guess there was a question about that. We're happy with the way Helios is performing so far. The team on the ground has done an incredible job getting machines into the fluid and getting them turned on. It's inspiring to go down there and watch them work, particularly in the summer when it's really hot. So they continue to do an awesome job. And again, our ability to control kind of machines and their how much power they're using, how much hash rate they're putting out, depending on environmental conditions, depending on where things are at in terms of each individual machine. We're really happy with. So Helios is great. In terms of immersion, it's been again, I wouldn't want to be mining any other way in Texas other than with immersion. It's a hot summer down there this year. I was there recently, it was 100 degrees. Tom's there right now. He can attest that it's pretty warm out. So you really want to be able to control heat, and immersion is the best way to control heat. And the fact that we're able to keep, dust and debris and particulate matter out of the facility as well is really important. So I'm happy with the way immersion's going. And obviously we're going to be putting some more numbers out with our June operational update, which is coming out next week. And we'll also have, a little bit more of a fulsome update on Helios and current operations there.
That's great. Peter, Alex, Tom, thank you ever so much for your time this afternoon and for taking questions from investors. And thank you once again to everybody for their engagement this afternoon. Peter, I will shortly redirect investors to provide you with their feedback as usual, which I know is particularly important to you all at Argo Blockchain. But before doing so, I wondered if I may just, Peter, ask you for a few closing comments to wrap up with.
Sure. Thanks a lot, Mark. Listen, it's been an interesting year so far. Obviously, 2021 has, was an incredible year for miners. It was a banner year. And 2022 is different. And that's the thing about this space is every year is different. But again, it doesn't change our long-term outlook and our long-term belief that if we continue to position the company in the right way, put it in the right place, then things are going to work out for us. I think of it, I've used the term before as like a rally car. A rally car race where you're just, there's times where things are clear sailing and you're flying ahead. And there's times where the road gets a little challenging and you got to go uphill. And at that time, this is the time where the wheat gets separated from the chaff. And I think we're going to see that in the next 6 months. I think there's going to be, some companies that are in harder places. We've seen that already a little bit. I feel like we're on the right road, on the right path. And, look forward to updating shareholders as we go.
That's great. Peter, Alex, Tom, thank you once again for your time this afternoon. Could I please ask investors not to close this session, as we'll now automatically redirect you for the opportunity to provide your feedback in order the management team can better understand your views and expectations. So take a few moments to complete, but I'm sure, again, will be highly valued by the company. On behalf of the management team of Argo Blockchain PLC, we'd like to thank you for attending today's Q&A session. Thank you and good afternoon to you all.